Hi friends, Rocky Outcrop here. This is a Bitcoin technical analysis video. We're all Rocky Outcropticians. If this is your first video, welcome to the family. There's a link in the Discord down below if you want to join a community of people who are all debt friendly and are looking forward to meeting you, because a friend of yours is a friend of ours and all that sort of stuff. So anyway, welcome to the video. And I'm actually quite pleased to be recording right now, where I just kind of noticed there as I was trying to set up the camera that the prices were up at 9,590 or something like that. I don't know. We'll look at that in a second. Which is great because it's not every day that I get to record during a bit of volatility, so that's always fun. And what I like to do during these times, by the way, is just to give a little bit of an example of how maybe you should act during volatility, because rather than sort of panicking or screaming about it or jumping up and down and talking about how exciting it all is, I'm just going to sit here for the first 30 seconds of the video not really doing anything, so you get the impression that when you're at home doing this on your own, you don't need to act right away, you don't need to jump in, and you don't need any FOMO or any of that sort of stuff. And it's best to be calm and reasonable and to always take the time, always, no matter what the conditions are when you log in, take the time to do the TA before you make any decision. Because FOMO and just jumping in based off the back of, oh my goodness, the price is this or whatever, whether that's to the long or the short side, is always a mistake, regardless of whether or not it actually works out in your favor or not. Acting in that way is a mistake, because what that is a lack of discipline, and the way to be a successful trader is to act with discipline. So right now I'm trying to demonstrate discipline to you, and hopefully you can see the price above my head jumping up there to 9,500 and back down to 9,461, and am I in there slamming in orders, like trying to sort of capitalize on this volatility that's happening right before our eyes? No, I'm not. I'm here chatting to you, and I'm going to do some technical analysis before I do anything else, which is what you should always do. Anyway, like and subscribe. We do these videos every day. So the reality of it, of course, is as well that we don't really look at the tiny time frames. So you can have. Excuse me. You could have set up. You could have been waiting or anticipating for something to happen based on your technical analysis that you do every day anyway. So there's that aspect of things. If you jump in and you've already sort of done your homework and your groundwork, that's different to just tuning in and reacting. As well, that's the other thing as well. You don't want to be super sort of reactive at any given time. Anyway, the price is now 9,450, and yeah, well, actually, I think I saw a tweet. Yesterday by Ivan on Tech. I think Ivan on Tech is great guy. It's really good to have a source on the internet as well, a YouTube personality who like sort of encourage you to whether you use his courses or whatever, you can absolutely learn everything on your own anyway, without his courses and whatever. And in fact, as well, if you want to start building on a particular blockchain, you'll find that the community within that blockchain is it's probably your first go-to resource anyway, whatever it happens to be. You join them on Gitter or whatever it happens to be. Anyway, I saw him saying yesterday, yes, we're breaking 9,500 or something like that, and Kevin Svensson retweeted and liked the tweet and everything else, and it's just kind of like, a bit of FOMO out there. Maybe we are going to break it, maybe during the recording of this video, who knows, we'll see how things go. Okay, so what are we looking at? And I think that the first thing we can do kind of do is get rid of our squiggly lines and our drawings and whatnot over here, because they're a little bit of a mess. And there's that red line there. I'm going to leave that on for just now, because that's probably worth talking about. And I can take these other ones away, sorry, just to leave that one on. And really that red line, so that red line on the RSI, I'll just talk about that as I'm deleting these things. Can you tell what that was? If you weren't watching yesterday, then there's a wee challenge for you. If you're watching yesterday, you know exactly what that was, because we talked about it at the time, obviously. But if you weren't watching yesterday, can you tell what that was? A wee question for you, just to give you a second to think about it. What was that? Well, that was a line that I drew between the highs on the RSI, the previous highs. Can't get that one because it's behind the thingy. Yeah, I can get it now. So we drew this line on the RSI yesterday, and that was between sort of these highs. As you can see, it didn't quite line up perfectly. Maybe there was a reason for that. I don't know. Maybe it's, maybe I moved it slightly on my mobile phone. Doesn't really matter. And we were looking at it yesterday. If I just get the wee drawing tool out here, we saw the prices had come up to here and had come down. The RSI, and it had gone up here, and it looked like we were going to get potentially some bearish divergence there. So that's why that line was there for us to kind of pay attention to. I always talk about how these things are never, it's kind of stupid to anticipate. It's not stupid to anticipate it. It's a really good idea to anticipate it, but it's stupid to sort of, react to something that's not been set in stone yet. And as you can see here, that the RSI has continued to go on up from where it was before. So yesterday's price action would have seen the RSI, had it gone down from there, had that been a local high, would have been bearishly divergent. But as it happens, we've come up here and the RSI has managed to negate that bearish divergence between this high and the current one right now. So that's it's only ever a warning sign anyway, and all the rest of it. Now, what would be more important? What would be different? You might be a question out there, might be different. Like what would be different about this? How would this be more impactful? And if it was up here in the oversold zone or the overbought zone, this up here happening, in that area. That's not very good drawing, but up in that area, then it would be in the overbought zone while there was the divergence, and obviously that has a bigger, so it's like that's more sort of important. So that's something to bear in mind, and that wasn't happening. But what do we have here in the stochastics? Well, we still have this bearish divergence, kind of showing up at the minute. Now, what's the biggest difference between these two here overall? Well, if I put a little note on just for the next wee while, so you can see, this one's better during oscillating. One of those words, hard to spell. I think I've got it there. Oscillating markets, right? You could say that that's better for oscillating markets, right? And you could say that this one here, if you had to, if somebody put a gun to your head and made it that, you could say this is better during trending markets. Okay, you could. Now, they're actually both quite useful and all the rest of it, and I wouldn't be so binary about things as to say that. But if you're going to have a distinction between these two here, the stochastics and the RSI, that might be something that you look to anyway. So during this trend here, we've not got to the overbought zone in this quite yet, anyhow, and that's sort of positive on that front. And but during this, in terms of this, like the sort of the moves, the oscillations within this moves, you can see that we've got this bearish divergence forming. It's potential. It's not there. It's not there. And the reason why it's not there, I mean, it is here in the stochastics. Of course, it's looking like it could be there. The reason why it's not a thing yet is because you need to see the prices come down first before you could say, look, this was a local high, in which case you could compare this high to this one. But until that's actually happened, it hasn't happened. Okay, so it's an important distinction. You can see the prices are now at 9,500, and we'll take a look at we will zoom in and all the rest of it in a second and take a look down at the lower time frames. I want to look at the lower time frames today here, and by lower time frames I mean anything under the daily is quite a low time frame. And I think that's quite important to point that out consistently to people, because when you're looking around in the world of trading in general, you'll get sort of overlapping talk about things. Now, if you're trading Forex, as an example, compared to say commodities, then the lower time frames are more meaningful. So it's like the semantics with language doesn't do a great job when you're just trying to give a message across. But if you're looking at something like Forex or whatever, which when people trade it, they trade it with extremely high leverage. They trade it with extremely high leverage, and you're looking at sort of smaller time frames, perhaps more than you would be necessarily with something else. So some people will say this is a high time frame, this is a low time frame, and it kind of creates a bit of a confusion for you. For me personally, just looking at crypto, really, it's important to kind of start off looking at the daily. If you're ever going to dip down into the lower time frames, and there'll be plenty of people out there. In fact, Tone Base has got a good friend called Joe. And I like the two of them. I think they're fun and entertaining people to watch and all the rest of it. But he's got a friend called Joe, and he looks at the 15-minute time frame, all the time, and that's his thing. And well, there's other people out there who would just there's people out there who would actually laugh in his face for doing that. I wouldn't, but there are other people out there who are like that, who would look at this sort of thing. Anyway, you can see over here in the 15-minute time frame that that we're right at this area of the. You can see it on all time frames as it happens. I'm not making a point about the 15-minute time frame. Just trying to say, like, over here was our previous high, really, and this is where we are here. And of course, in terms of the 15-minute time frame, that's not necessarily our previous high, but there's plenty of other highs in the way. But just to point it out. Actually, go to the 4-hour time frame. So so what I'm saying makes a bit more sense to people. It's a bit more rational, I suppose, over here. But you can see it's just a big old wick here, and currently the body of this one's coming up to just up to here at the 9,500 level. Now, anyway. Yeah, none of that actually constitutes TA. Let's do a little bit of TA, shall we? Actually, in yesterday's episode, looking at the 4-hour, was it the 1-hour episode? It was a couple of days ago in the 1-hour. I looked at the, and I'll just get rid of the oscillators down below. A couple of days ago, I looked at the 1-hour. A couple of days ago, whatever, and I said potentially we have some sort of triangle here, and I put it with a flat bottom at the time, and then I said, in many respects. We have possibly broken out of this one a little bit earlier than whether you use wicks or bodies is not particularly here there nor there, because if you actually think that you can be precise and actually predict the market, and then what it comes down to being able to predict the market is the exact positioning of your stuff and all the rest of it, then you're kidding yourself on. Anyway, so we draw it in here and we're saying, like in effect if this is a breakout of this thing, it's front running it because it was a bit early. And then we said, well, what does that kind of mean sometimes? Well, sometimes it just means you're simply put you were wrong, to have this in here or whatever. It doesn't really matter. You can use your own language for that. And maybe instead what we were looking at was a rectangle. It's what we kind of propositioned yesterday. It's what we spoke about. And rectangles, what are rectangles? Well, rectangles come from classic charting. Actually, here, we'll talk about classic charting for a minute during this FOMO period. Actually, if there's one takeaway from this lesson, it's don't FOMO, right? Okay, there's one lesson takeaway from this lesson, from this episode today, is that I think you can see the prices are 9,475, that I'm not FOMO-tastic here overall, and I'm not encouraging it. I'm discouraging people to be FOMO-y about stuff. And all the rest of it, and we can sort of see how this all pans out. Yeah, classical charting, right? So what's classical charting and what's sort of modern charting? And if you heard these phrases before, like for instance, if you know who Peter Brandt is, he's a classical chartist, for example. And if you know who, say, well, actually, all the modern traders, people who are younger than 40. It's almost impossible for them to not be anything but sort of modern. In the 80s, when computers kind of became usable, people started putting all these maths equations in, and were able to come up with stuff like, for instance, they were able to come up with these things here, which were all invented in around about sort of the 80s and whatever, where you've got the RSI, the stochastics, and the MACD, and they weren't available to people back in the 1930s. And you might say, well, why was that? Well, of course, the theory could have been there, but the fact is that these people back in the 1930s actually drew out their charts with paper and using pens and stuff like that. They physically, they drew them themselves. So when they worked out what a moving average was, they worked it out themselves manually. They didn't have some button that they pushed on a computer that drew it in for them. They had to work it out themselves. So things like simple moving averages obviously much more popular amongst people than exponential ones, because maths is simpler, or whatever else, for instance, and stuff like that. And patterns became such a big deal as well, like, the shapes of things. And it really, what it boiled down to was triangles and squares and stuff like that. And just to try and say, like, how to try and describe the price action in a certain time and look for these things repeating themselves across time. Now, of course, people love nowadays to focus on fractals. You'll have heard of fractals before, and people go wild over fractals and all that sort of stuff. But, you're not looking for history to repeat itself exactly, which is a bit of the danger of the old fractal school. What you're looking for instead is for sort of things to rhyme, or for you to be able to learn the lessons from the past. You know, like that's acceptable. Looking for sort of exact repeats and things is a little bit silly, especially when you're looking across different things. You'll see people say, "Oh, we've seen this fractal in gold, and I think it's happening in Bitcoin." You know, in my personal opinion, this is just my opinion. That's lunacy. But you know, people do this, and you can see. And instead of saying, you know, and I think that when people are looking at those things, you could say, and you could say things like, there's this fractal, and what I would say is, well, actually, you know, you could see that maybe we went up and we touched the 618 retrace on overbought conditions. We had bearish divergence, and the prices went down, and you could see that happening there, and it looked like that. And then over here on this chart, you can see a similar thing happening, and it's got, you know, we're touching the 618, and we've got bearish divergence, and we're going to see a retrace or whatever, and that works. But you know, fractals is crazy. Anyway, the people, you know, and the other stuff back in the day was, you got people like Wyckoff and stuff working in investment places, kind of like looking at what the big dogs are doing, and then kind of saying, you know, like writing books so that the retail trader can understand how people who've got more experience look at the markets and stuff like that. Nowadays, there's so much information available on to our fingertips and YouTube and everything else, that the world's different. But of course, the world's different as well, primarily based on the fact that we've got computing power. This whole trading view, for instance, is a fantastic thing that just simply didn't exist 20 years ago. This type of technology. If you wanted to look at stuff 20 years ago using computers, you could have done things like I say, you know, the MacD invented 20 odd years ago. You could do all of that, but you might not get, like, you know, all the price action. You might take ages for it to load up, or you might only get like a day or however many periods on your thingy. You couldn't necessarily just flick between things. You couldn't go, for instance, you certainly couldn't go on a 5-minute chart and then scroll right out, you know, or whatever, and get all of that price action on your computer, and then scroll right back in and get it right down to the very second, then hit the auto button and see what's going on. This ability to do this here, this is an entirely modern thing. So the biggest difference in classically charting and modern charting is that it's basically the technology that enables it. And the back in the day stuff, the classical stuff, is all about, like, you know, shapes of things and resistance lines and whatnot. And modern stuff can use indicators to give you an idea about things. Something that people might have been looking at was, as well, is just something to point out, by the way, if you're thinking about stuff, is some people might have thought when they saw this thing here that this is some sort of inverted head and shoulders. Just want to point out the fact that that's after this upward thrust here. You don't get inverted head and shoulders as a sort of up there as a continuation pattern, and that would be more of a reversal pattern. So, you know, that wouldn't actually work if that's what you're looking at, thinking that just now, just you know, just on that basis there. Anyway, so what are we looking at? Are we going to break out of this particular rectangle at the minute? If we did, would we consider it to be a rectangle? Not really, because it's just got the sort of the two touches at the top. Obviously, it depends what time frame you're at, and the two at the bottom. You could say it's a square. In fact, the guys that came up with the rectangle, who was it? Schabacker. I don't know how you say his name. I can never remember how you. He said that I think he said that they're more often squares than they are actually rectangles, as it happens. So there you go, there's your square. People talk about things like diamonds as well. You might see people talk about whether or not there's a diamond at the minute. Even I mentioned the potential for a diamond, I think, a few days ago on this. Was it this one? You tell me if it was this one or not. Anyway, so yeah, so what are we? So could we potentially be breaking out this area? Right. Let's just be all super classical about things and talk about this. Like, there's two perspectives on this. You could have a measured move off the back of, right? You could look at the measured move going between, and let's just make this color actually visible, between this area here, you know, just of the box itself, right? Or you could measure the sort of the prior. You could include the size of the move on the run up to it. Some people even just look at the sort of the move on the run up to it. Then you've got the consolidation. That there is happens to be just the same here. You know, so anyway, there's two perspectives that you could have on this as terms of a breakout. Let's just look at it for the crack, right? Look at it for the crack. Where does that take us up to? It takes us all the way up to 11,000 or so. Now, what that would do? That would fill our gap that we have on the CME chart. If I go up to a reasonable non-lunatic time frame, like the daily time frame here, to point this one out, you can see there's a gap in here at 11k. So that could get that filled if that move happened, which would be interesting to see in the face of the halving coming up at the minute. The halving, whatever. What one was that? What were we doing just there? Remind me what we were doing. Oh, we were doing the bigger one. So let's just take a look and see if you were to look at it from a smaller one perspective. Right to do. Now we obviously as modern people have the luxury of being able to do both classical charting and modern charting, just like how we have the luxury of being able to listen to the Rolling Stones and Bach, you know, or Mozart, and One Direction, right? We can do sort of we've got all this sort of stuff that we can listen to if we want to enjoy music, right? One Direction. So just in the same way that we can do both at once, you know. So whenever somebody says they're a classical chartist, it kind of is like, well, why limit yourself to just doing that? Why would you not look at other stuff? They don't. There's your answer. They don't. They don't. They tend not to. It's just a nice thing to describe yourself that way. Anyway, if it was the smaller one, where would that take us up to? The sort of the 10,000 area, you know, 10,200, 10,400, whatever, if you were to get that minimum measured move. Now, why do these people talk about minimum measured moves, right? Well, the basic idea behind a minimum measured move is to give you objectivity in the face of volatility after a breakout. So if you thought that there was going to be a minimum measured move of this distance up the way, then you could say that if the prices come up a bit, and for instance, you know, come up to here and then retest down here and whatever else, it's the idea is to give you objectivity, where you could say, look, I'm going to try and, like, this is where I'm looking for, and maintain that hope. Now, of course, that would be kind of crazy to do in isolation, and of course, you continue to look at your technicals and everything else on the way up there. And if something's telling you that there's no way it's going to get up there, then just take the profit or whatever. Don't keep telling yourself, no, it's a minimum move, it's a minimum, it must achieve it. Anyway, why am I wasting all this time here during this period of time? Well, two things. One is because these things so often could just be fake outs, right? You know, they could be. And the other thing is because, like, because if this was to be a move up here, there's plenty of trading to be happening between the sort of 9,500 area in general and the 10,200 area or whatever. There's plenty to be had, and we don't need to get too wild about things. But what can we say about this area that's not happening so far? Well, generally speaking, if you're going to have a breakout, you're going to have a breakout. You want to see it with volume. So if you're going to see a breakout, is there a breakout? Question mark. Where is the volume? Right, so what have we got down here? Well, we have this continually diminishing volume down here just now at the minute. And that's fine. But this is, of course, the daily chart. So let's go down to the 4-hour chart and see if we've got big volume. Well, you know, we have this shape here of the consolidation area. I'm just going to go back to calling this consolidation because that's what it was. It was sideways consolidation. I honestly don't give two flying poopy whoopy jobby wobbies about what actual shape it is at all. This is just a way of communicating with people. Bear in mind, by the way, throughout this entire thing, we've got this line up here at the top, right? Throughout this entire chat, whether it was a triangle, whether it was whatever, we've always had that line there that we're looking at, which is a horizontal line in terms of support and resistance and whatnot. Anyway, I'll undo that and I'll put my line back up, this thing back on, and I'll stick it right on top of the blue one so you can't see it as well, even better. Now, during this phase here, the volume in these 4-hour candle periods, we've had much bigger ones, all of these bigger, and these ones were bigger, so these candles here had more volume than the one that we're seeing currently. So, you know, that's cool, but how long have we got left in this one? We've got 2 hours and 10 minutes left on this candle, so there's plenty of time for this to go up and become, you know, a breakout style candle. What would I say would be like definitive volume on this thing? I suppose you could say if we were up here, you know, up higher than over all of these other volume candles, then you could say, like, hey, look, that's breakout volume, for instance. And yeah, you know, you could look at that. So the prices are now at 9,549. So there's $100 up from where you could have got in at if you'd been doing your technical analysis earlier on and you'd have anticipated this in advance. Then you could have done that. You could have done, and you'd be looking up that and saying, well, you know, am I going to take profit now or not? I wonder if I keep talking, you know, 20 minutes into this thing. Obviously, I'm willing to let this video drag on a little bit longer, just so that I can show, like, if the prices come back down underneath 9,500, that the FOMO aspect of this, and indeed if the prices continue to go up and actually does make some sort of breakout type thing happen and we're looking towards the 10,000, then I can remind everybody that trading between the breakout area where you've gone past the sort of potential fake out up towards the top could get you a sort of 7%. But say you were to trade it from where it's more risky or hard to manage your risk, and you're sort of going from within the consolidation period up to there, then you might get 8%. So you've got a 1% increase in your profit for a heck lot more risk is what you're looking at there. So is that wise? Not necessarily. Not necessarily wise. 9.530. Let's see how things evolve. So anyway, then what else can we look at? Because we're just really just kind of like spending the time here together. By the way, I really appreciate everybody who tunes into these videos every day. I have to say so. I really massively do, and I think it's absolutely wonderful. So thank you so much for subscribing, and thank you so much for liking and sharing these videos with a friend. And if you actually want to see, if you're like, hey Rocky man, stop pissing me about, give me some technical analysis, you can look at yesterday's video as well. Things actually haven't changed that much overall in terms of what we're talking about, and it really just comes down to this 24-hour time frame. Let's go up to the 2-day time frame to make things a bit easier. In fact, 2-day time frame. Where are we looking at here? Well, we've got above this area over here of this previous sort of this phase in the market just here, and then really we kind of have to look towards our other target of 10,000 really as being the upside overall. As I've said so many times, since well, it's not fair to say that I've been saying that we're in an uptrend since the 13th of March. We talked about this loads, by the way, back then. We talked about this loads back then, but anyway, we've been in an uptrend for in terms of the daily charts, since the 13th of March, as it happens. Of course, that was only identifiable after you got a series of higher lows and higher highs and all the rest of it. But you can retrospectively say that. And when you're in an uptrend, well, you're in an uptrend, And we have this yellow line here, and it's been respected. This yellow line forms the top side of what could potentially be seen as being, depending on what way you're looking at it, a channel that perhaps we broke out of, if you wanted to look at it like that, or it could have been a wedge type formation. Although I can't really be bothered forcing it in there. Just if I wanted to point out in terms of just if you were looking at the charts in terms of logarithmic, then channels look like wedges, which is why people say you can't do one way or the other. But it's just worth bearing in mind, as you're doing your own charting. And what else can we talk about as we wait? If you say you had an entry price here, say you wanted to take a low risk trade. Now I'm not a financial advisor, not a financial advice, but say you'd wanted to do it at sort of 9,500 for the breakout, if that's what you thought would happen. And as you can see, the prices have they come down there? Have I just not noticed? 9,505. If you had your entry, if you put an order in there, if you saw that at 9,400, 9,491, we're back under 9,500. So you've had your fill there if you wanted to, but you're gonna have to manage that risk or whatever at this point here. And I think this is a demonstration of the benefit of not doing FOMO. You log in, you see something happening, you think that it's super fantastic. That's German for super fantastic. And if you and you think I'm going to have to get in now or whatever, you can choose your level. Your level can be at an area where you manage your risk. You don't have to throw everything out the window completely. So you could be managing your risk, for instance, right now at 9,500, for instance. I'm not a financial advisor, that's financial advice. That's just what you could have been doing, and you could be saying, look, I'm willing for the prices to drop down a wee bit here, or whatever in this time frame. Let's go down to the 15-minute time frame. Let's go down to the 5-minute time frame. Let's get rid of all the crap down below so it's visible. Oh, sorry. Let's hit auto so it's visible. You could have been looking at this candle here with this big old rise up, just as we were talking, just as we started filming, up here, all the way up there, went up to 9,627 and thought, I better shit my pants and get right in on this thing. Where did the prices come afterwards? All the way down to 9,445. This was during our filming and talking then, and then we saw the prices come up again to 9,550. Thought, oh no, I've totally missed the move. You start FOMOing in there. Then you see the prices, then they come back down to 9,500, down below 9,500 again, and you think, and you still didn't get in at that point, and you think, all right, that's it, I'm going to have to get in now. You see the prices going up to 9,530, and you think, that's it, I'm definitely, look at that, it came right back down to there again anyway. Was that predictable to happen? Well, predictable is maybe the wrong word, but you could have anticipated it. And there you go. And anyhow, Do I think that this has got a lot of? Would I, am I going to make predictions of this? I don't think you can really make predictions when you're charting. It's all about managing risk. All trading is managing risk. People who think that trading is predicting stuff are completely and absolutely bonkers. But people who are able to look at this and take away the lesson that it's all about managing risk, you don't need to predict anything. You can look at what things are going. You can have the objectivity from a measured move. You can look at towards horizontal targets. You can look at the consolidation period that you're in before and try and make an assessment off of that. You can look towards the strength, the volume and everything else. You can look to all these things that give you more information. But do you need to? Right. Anyway, let's go down to the 1 hour time frame and see if there's any divergence or anything on the go between this. Now, this high is higher than this high, and this high will be higher than this high most likely. Look, this again. You can question this and say, is this the breakout volume or not? Well, look at the prices right now. They're below 9,500. And was I saying that 9,500 is the entry point? No, I was just purely, that's an arbitrary number. You absolutely could have got 9,480 or something if you were really trying to. But this is for people who are like scalping maybe, or for people who are like, I don't know, inexperienced traders like to look down to the very sort of penny as to where they're getting in at. So I suppose this appeals to them. Yeah, let's look at the oscillators on the 1 hour time frame then and see what we've got on the go here between these highs. This is the high, this is the high, this is the high, this is the high. Actually though, really this is our previous high here. This is our previous high here in the 1 hour time frame here. Previous to that, we had this one, which was here. And then currently over here, we've got this high here. So we've got one high. So we've got, look, I'll just do the typing in again, and then I'll tune out, right? So you stuck through all this. I really do appreciate if you hit subscribe. We do these videos every day. Every day, this is a very different video every day. Okay, this is a very different video from what they're normally like. Ask anybody else in the Discord; they'll tell you, "Whoa, that was a very different video you did today, Rocky." And I've not really done much. I don't know. I've done lots of whatever you decide. But so anyway, but we do videos every single day, and they're normally maybe got more technical analysis in them that's maybe actionable longer. But I think this isn't about actionable technical analysis. This is about actionable emotional responses to changes in the market conditions and how you should approach your trading. Look at the prices currently 9,500 on the nose. So you've got high. You've got, this is just a wee lesson, quick lesson, just higher high. Higher high. Okay. Higher high. This one is speculative at the moment, by the way, speculative. But you could say that the actual higher high was here. I'm putting it in here because the sort of the likelihood is, in terms of this hourly time frame, which has got 1 minute and 21 seconds to go on it, that's where that'll close. Okay. So I'm willing to write that in now, but I just want to throw out a disclaimer there that even if there's only 1 minute left and all the rest of it, that could be wrong. It could be wrong, but like there's your higher high, right? Okay. And then over here, you've got high on the oscillator, and what you've got here, you've got a lower high. Okay. And then over here, you've got a lower high. Right. That's called bearishly divergent. So what do I feel like during this? Well, that's a warning sign for you. That's a warning sign that can kind of go along with this here, which looks like breakout volume potentially on the 1 hour candle. You can go up to the 4 hour candles though, and then kind of compare that and still say, well, we've got 2 hours left, 2 hours and 30 minutes left here of this thing. It's still not quite there in terms of breakout-ish style stuff. The prices still haven't actually broken out at 9,492. Still not happened. And yeah, like these things obviously they don't line up on this time frame, but you can see here that between this high, you can see yourself between this high here and this, which is the higher high, that you're looking at it between this point here and this point here as to whether or not they will be it'll be higher or not. Now it is currently is higher, but there's still time left on this, so predicting that in advance is the wrong thing. Like I was saying when it was just a minute left on the 1 hour candle, predicting that in advance is the wrong thing. It could still, it's got 2 hours for this to kind of not be so high, but you've got to look out for that yourself, and that's how you would do this sort of thing. That's how you could look at this. That's how you could break it down if you really wanted to look towards the lower time frames in terms of making little trades. We'll go back over to the 1 hour time frame. There you go, it's set in there. Where did it actually set in at? Well, right on our line. You know, obviously it's debatable, but where it's set in at, but it's done it now. The hourly's closed. So if you're trading this on an hourly time frame, you could maybe say that we did it. I actually can't even be bothered. You can look yourself if you're trading this. I'm not trading this right now in this way. This isn't how I'm trading this. This is just in order to point out something that's going on for people. How I'm trading this is, I'm not even going to explain that right now. Subscribers kind of probably can intuit it themselves. We closed above our little gap here and our little our line here, and we've busted that 9,500 level on the hourly time frame. Looking back the way, that was where the wick came up to, so that's like where that is. And we have an entry, a hypothetical entry. Let's call it 9,480, because I don't think we would have gone for 9,500. That was just for an arbitrary number. And we're currently sat there in a little bit of profit. We can have a stop loss hypothetically at 9,400 if we wanted to. We could even move our stop loss now if we wanted up to 9,500, and it would be in profit. And you just wouldn't care. You'd have made, nobody ever went bust taking profits. You could do that. The prices are now 9,521. Will we see something happen positive over the next couple of hours? Maybe we will. Maybe we will. Is it fair to say that this is perhaps setting in some bearish divergence? Yeah. Is that enough to make you not trade? No. Is it a warning sign? Yeah. The stochastics are only just coming up to here now. They're not bearishly divergent across this last little sort of chunk here of time. You'd have to go back as far as that to find the sort of the divergence on the go in the stochastics. The MACD is bearishly divergent, sure it is. RSI, in terms of the trend and stuff, is not divergent. And yeah, anyway, I think that kind of constitutes a good lesson now in terms of if you were just wanting to trade this in a smaller time frame. Perhaps you were short in this. Perhaps you're crazy and what you use is 100x and all the rest of it. And if you'd used 100x and got in there when we opened up the video at say 9,533, you would have could have quite easily been liquidated during the video. Had you sort of not been FOMO-tastic about stuff and thought about things, then you could currently be in a profit. I don't know what profit you're going to be. 100% at least profit, I suppose. If you're using 100, at least, I don't know. If you're using 10x, you'd probably be in decent profit anyway. I can't be bothered doing the maths. And you could have a stop in profit as well if you wanted to, and you wouldn't have to worry, and you could think, well, hey, don't have to make $1 million every day. There's some trading for you. So let's see. This. I'm going to still call it the same as what I call all my videos, and there is technical analysis in here. Clearly, as part of this video, is a lot of it's constitute technical analysis. But I think that that what we've really got on the go here is like just a little way of thinking about things, and why would you necessarily want to have a stop loss just in profit here and risk it being hit so quickly? Why would you want that? Well, partly because of the chances of this divergence here playing out to the extent that we come back into this area during the day. You might want to put a take profit in somewhere as well. You might want to take profit at 9,600. You could have easily been trading this from within the area and looking up to those areas and stuff as well yourself, and various other things, but that's all besides the point. I think, yeah, so today's video has been massively different. I've liked taking the opportunity to do something different. It's gone on a lot bit longer, but we've been able to carry it over the closing of the hourly and whatnot, and talk about things, and I also can put it into context when we look at the 4-hour time frame and say, like, this isn't done yet, depending on what you're looking at. And in terms of the 24-hour time frame, obviously there's a lot of muck on there, so it's hard to see, but it's in terms of the 24-hour time frame, this is not done yet, and that tweet from Ivan, massive respect. Again, please never think I'm. By the way, I do these videos for free. It's a non-monetized channel. I've not made a single penny doing any of this. I don't have any sort of. I'm not in this to go around throwing shade on people. It's so ridiculous. People might think that. I'm just pointing out the fact that that if you tweet, 24 hours ago about 9,500 when the prices were, or whenever that was, 30th of April at midnight, if you tweet about 9,500 at that point, there's liable to go against you a wee bit, but that's cool, and now we're looking at that 9,500 area, and that's cool. Maybe I misinterpreted his tweet, by the way. I'm not saying anything negative about the guy. It could be my own, English interpretation skills are lacking somewhat, and I've misread something. I don't care. I'm just pointing out the fact that at 9,500, there's whatever. Look, we're done here, right? We're done here. We're looking up towards, in terms of this is an uptrend, whatever else, we're looking towards those targets towards the top side, there's plenty of places where you could look to just simply take profit if that's what you're doing. And in the bigger scheme of things, this RSI has managed to throw off the shackles of the bearish divergence from yesterday. MACD hasn't, the stochastics hasn't. Pardon me, you wouldn't be surprised at all to see these things come back and test these moving averages at some point in the near enough future. This is a 24-hour time frame. Can imagine these things crossing over fairly soon. That like this month we could see a golden cross happen, and if we see a golden cross happen this month, this is me completely ignoring the fundamentals in the market, of course. Then I'd anticipate these things getting retested, and at any given time, the higher it goes, the bigger they are, the bigger they fall. In a sense, if you want to think about it that way too, if you're looking to short this thing at some point, so that's all good. And what's the final thing? Yeah, somebody asked me yesterday if I'd be able to do some fundamental analysis in videos. I know I never do it. Maybe I will sometime for all the coins or whatever. I'll let you know if I'm going to do that at some point. Might not. I gave a shout out to the sort of brave BLX guys, the brave new coin people who talk about that sort of thing for some other coins recently, because you might be interested in looking at that for the on-chain analytics and all this sort of stuff. But whatever, this video's gone on for way too long. 40 minutes in the one video. It's the longest one I've done in about 3 months. But it was just a bit of sort of like to show you the advantages of not having FOMO. And I can tune out now if prices are now 9,519. All of that craziness. If you were experiencing that at some point today yourself, maybe you're watching this later on and you think to yourself, oh yeah, we had that exciting time earlier on. I wonder what Rocky was thinking during it. There you go. That's what I was thinking during it. I was not pissing myself. 9,506. Oh, are we going to get stopped out on our hypothetical trade? Oh, 9,000. I'm going to tune out before I could sit in here all day. Catch you later. Thanks for tuning in. I'll see you next time. Oh, and join the Discord. Comment below, like, subscribe, all that shit. See you next time.